Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about some of the things that advisors and brokers and insurance salesmen will not tell you before buying an annuity. A lot of them will either gloss over it or they'll barely mention it. And I just wanted to kind of go over those things more in depth so that you know what to look for. And maybe ask your advisor if they're not talking about these things. All right. So I'm going to share my screen a little bit because I want to share some of just some context on this, because when people are looking at annuities, they're usually looking at a few options. Usually when I say few, I'm talking 3 at the most. So 1 to 3, maybe even 1 that is being pitched to them by their advisor, and their advisor, for whatever reason, saying, "Hey, look, this is the best one. Trust me, it's going to be great." And maybe it is a good one. But a lot of times, from my experience, it's not. It's a decent one, or it's an okay one, or maybe it's just terrible. But a lot of times there are other options out there that if the client had seen them, they might have picked those over the other one. In fact, that happens most of the time. When people reach out to me, they're like, "Yeah, I sold this annuity. I didn't know what I was buying. I thought I did, but then it just didn't work out. And this is what I really wanted," which is usually they want a lifetime income or they wanted a decent growth rate, and they didn't get either. So, all right, so I'm going to share my screen, and then I'm going to talk about some things to watch out for. All right. Okay, so I just threw a couple in here who is 62 years old. They got $1 million. They're in Maryland, and they're going to start income in 5 years. Okay, a basic, if you're looking just for highest income, you can see an income rider, which is usually the best, will give you a pretty decent amount of annual income for the rest of your life. Okay, it's great. F&G is probably the best one out of here if you're looking for A-rated. But you got lots of options out here, and some agents only have access to 1 or 2 options. Okay, you might be pitched an annuity that's not even on this list, or they're way down on the list. So if I go down more, you might be pitched an annuity that's paying $94,000 for that same $1 million. Okay, maybe you're being pitched an annuity that's paying $67,000. Still a good company, but not the highest payout, and you may not know what questions they ask. And so you have to know that there are other options out there. So I tell people, if you're looking for an annuity, check out my calculators. You'll see what's available. My calculators plug into Canex and Annuity Rate Watch. Okay, those are 2 providers that give us data directly from the carriers, and they feed it into my calculator so that people can go on there, the consumer, and they can research rates. They can research what income riders are paying and see what the highest payout would be for lifetime income. They can look at the SPIAs and the DIAs. They can look at the MIGAs. Okay, it allows you to kind of go in with eyes wide open. They talk about when you get married, go in with eyes wide open, but after you're married, have your eyes half shut. Good advice, but for annuities, your eyes probably better to be wide open the whole time, but definitely wide open right from the beginning, because once you lock your money up, you want to make sure it's in a really good contract, not just something that was, on the second page of their handout and it wasn't the very best option, but it paid them the most. Okay. All right. So let's talk about things to look out for. I made some notes here. Surrender fees and low liquidity. This kind of goes without saying. They do have surrender fees and they do have low liquidity. Okay, when you put something in there, you might have a 5 to 10 year surrender charge period, which if you're looking for lifetime income, it doesn't matter. You want that for life anyways. But it's still good to know if you can take out any kind of withdrawals, or if it's completely locked up, or what the surrender charges are if you were to take it out. So often when I'm chatting with people, I do show them, hey, look, you put $600,000 in, but if you do take it out next year, it'll be like $560 or $550. Right. But if you wait 5 years, it looks like you're going to break even. Right. Well, look at that. But again, that's why we make sure you have plenty of assets outside of it, so that you never have to touch it if there's an emergency. And if it's for lifetime income, you're never going to really surrender it anyways. So, and if it's a MIGA and you're stripping off the interest, it's good to know that you can do that, or you can't. Right. So that you don't have those surrender charges. Okay, high fees and expenses. Yes, there are fees in a lot of annuities. The MIGAs and the SPIAs and DIAs, they don't have any fees. Unless, of course, an advisory product, then yes, you'll pay fees on the MIGAs. But for income riders, you pay a fee. Like going back to my screen here, you'll see F&G. Let me just pull this one up. So this one, it is, what are they charging? Like 1%? That's typically what they charge. Let me go back here. Yeah, 1.15% rider fee. Okay, that's not just a 1.15. That's a rider fee. That's based off of the benefit base here. Okay, not your account value. Okay. So your account value, if you look at it, it'll probably rise a little bit. It's not a huge amount of growth, but you're not buying this for growth. You're buying this for a lot of income. And so, but they're going to charge you the fee. See the rider charge over here? That is based off of the value of the benefit base. Okay. They're giving you like a 7.2% growth rate guaranteed. Pretty good. But they're charging you for it. But it's worth it if you're looking for highest income, because you're going to take a 1.4 million benefit and multiply it by almost 8% and give you that income. It's great. That's very, very valuable. But again, it's you gotta realize what you're getting. All right, so fees. Yeah, so you can see the fees here. They are fees. You just need to know that they're there. And you can look at this and say, well, I hate fees. I don't want fees. And your advisor should be able to say, all right, well, we don't need you to pay. That's a lot of fees. What are we talking, like 200,000 plus in fees? So you look at that and say, well, I don't want to pay any fees. Great. Then you don't have to. You say no rider fee right there. Okay, and then they can show you all the options. And of course, the income's less. It's quite a bit less. You're talking what, like $40,000 less? So over 30 years, that's quite a bit of money. That's like, $1.2 million. So maybe 200,000 in fees is good to get an extra 1.2 million in income. So anyways, it just depends on what you're looking for, but you have to ask about that. All right, now let me go back here. Another thing is upfront bonuses are misleading. Yes, a lot of times I'll say, hey, you're going to get this bonus. It's going to be great. Look at 20% income-based bonus, 8% base bonus. You got all these bonuses, but really when it comes down to it, I want income, okay? All right, so if I want a premium bonus, like I might be saying, well, I want free money. Well, the highest free money in here, it's not the base bonus. This goes to your income benefit. Premium bonus. Here's the highest premium bonus. Pretty good. You get free money. That means you're going to log in your account. You're going to see 1.1 million cash in that account. That is real. But if it's not the highest income, then that could be misleading. Okay, so you want to pick something that has the highest income, and this is highest income. And so, and I can get you products that are like 20% or 23% premium bonuses, but there's fees involved. And then the average growth rate after that is 3%. Okay, those are growth products. But when you have an upfront bonus that's so big like that, the insurance company claws it back somehow, and they do it by lower growth later on. So fees can be misleading. They're a great sales tool, though. It's a great way to sell a product and earn a commission, but not a great way to keep a customer happy. So anyways, that's one thing to think about. Let's see, the urgency pitch. Yeah, that's one I want to talk about. So a lot of times I'll say, hey, you need to do this now, this week, because guess what? Rates are going down next week. That could be true. And if rates are going next week, they really do owe it to tell you that they are, right? Because I'd hate for you to be looking for something and be like excited to buy it and then wait a week and say, hey, I want to get it. And then the rates went down. You're like, why didn't you tell me about it, right? But more often than not, rates are fine. And they're not going to go down. And if they do, they're not going to go down substantially. And so a lot of times we use urgency, fear tactics to try to get people to do something. Hey, you need to do it now, because if you don't, what if your money in your account value goes down more and you can't buy as much income, right? Which is true. Or what if rates go down? Rates are going to go down quite a bit next week. And if you don't buy this now, then you're not going to be able to lock in this high lifetime income. That could happen, but it rarely does. Okay. I've only had it happen one time. Okay. And it did go down, and the person was able to lock in like $5,000 less a year in income. So, but they had no idea if they were going to buy it. And then 2 weeks later, they changed their mind. And they're like, yeah, we're going to do it. And rates happen to change, which sometimes we know about, but sometimes we don't. So usually they will email us and let us know. But it's very easy to kind of show urgency and try to get people to do something and kind of play on their emotions. And if someone's doing that and you feel like you're being sold to, trust your gut, because you are. Okay. Just do your research, see what's available. And then if you're comfortable with an advisor, reach out to them. And you should never feel like you're being sold something. Never feel like you are being pitched something. I mean, when I get on calls with people, I'll show them what they're looking for. I'll say, okay, you're looking for income. You got this much to invest. Okay, great. Well, let's plug in the numbers. Let's see what it looks like. Okay, well, this is what it pays out. Are you married? Okay, fine. If you're married, here's the joint payout. Here's a joint payout. You can see all the payout, all the companies here. And then I'll ask, do you want a B++ or do you want A-rated? Like, what's your risk tolerance for these? And then I'll help you. If you want to purchase one, I absolutely will help you. We'll submit an application, we'll lock in the rate, and I'll take care of you. So, but that's really up to you. And I'd love to help you if it comes to that. So either way, go to my website, johnstevenson.com, check out the rates for yourself. And of course, if you're looking to purchase an annuity, reach out to me. There's a link to book a call right there on my website. So happy to help. and not be pushy and be as transparent as I possibly can. So if you like the video, make sure you click the like button, subscribe, share, comment below if you got questions, and we'll see you next time.